We'd hoped this was going to be a good result, and it was a very good result. The numbers on an underlying basis were well above our forecasts, and we were there at the top of the market. Now, this is very much a store rollout story, as you know, and they added 85 new stores over the course of the year on a net basis. That was pretty much as we expected, but 55 of those were in the US. And anyone who had concerns that perhaps the US was going to be a difficult market, an unusual market for them, would have those doubts assuaged, I think. And one of the things that the company wanted to make crystal clear, in fact, they put it in black and white in their outlook statement, was that the momentum will increase in FY23. So not sustain, it will increase. So we're going to see an acceleration. We've got 114 new store openings, which is an increase of 34% on the amount opened in FY22. But if you look at what they did in the first 8 weeks, it was 22 stores. Now, speaking to Victor yesterday, he was encouraging us to do the maths on what that would mean as a run rate, which if you do the maths, it works out to be 143 stores over the course of FY23. So again, around about 20% higher than our number. So is this out of the realms of possibility? I suspect not. Partly because if you look at the new markets that they've added over the last 12 weeks, they've entered 4 new countries. And as Victor said yesterday, you do one, and it's really, really hard, and you do another new market, and it's a bit easier. You come to the 4th, and actually it's like falling off a log. And so Poland and Canada and Namibia and Hong Kong have all been added in the past 12 weeks. And if you look very, very carefully into the financial statements, you see that they've set up subsidiaries called Lovisa Mexico and Lovisa Italy. So these markets will be added soon. Italy is a country of 60 million people, and of course it's the fashion capital, arguably, of the world. If they can crack Italy, they can pretty much crack anywhere. Mexico, country of 130 million people, they know that they do well with the Hispanic population in Southern California. They have a lot of Spanish speakers who operate the stores in California that they could use to launch into Mexico. So these markets, which aren't included in our numbers, could very easily be added in FY23. Hong Kong, could that be the gateway to China, to mainland China? And actually, I asked him this yesterday, and he basically said yes. You'll remember that Victor was the CEO Asia Pacific for Inditex and was responsible for taking Zara into China, and he lived for many years in Shanghai. It's a market that he knows. It's a market he's not afraid of. It's certainly a market I believe he wants to take Lovisa into. Even Poland is a precursor to a greater move into Eastern Europe. So whether it's the Czech Republic or Romania, Bulgaria, all of these markets are going to be on the hit list for Lovisa. Now, I think one of the key things that Victor said was that he sees his role as building Lovisa as a global brand. And to do that, he needs a global presence, which means being in all of these key markets. And it's not just the ones I've talked about, but it's also countries like India, countries like Japan. I mean, how big does this thing get? I mean, it could be the biggest thing that I've ever covered. So we'll see how it goes. But at the moment, it's going reasonably well. The same-store sales growth was just short of 20% in FY22, and we don't assume that that's going to continue. But if it's better than the 4% we have in our numbers, then there's upside again to our forecasts. The gross margins were up 220%, 220 basis points, well above our forecast. In fact, 260 basis points above our forecast. Why? There's inflation around, but of course they've raised prices. You'll see the annualization of that price increase coming into FY23. And so margins will be protected in that year as well. So all of this led to EBIT before the LTI payment, which was 20% above our forecast. Remember, we were top of the market. It was double the earnings that they did in the PCP. Now, of course, you take off the LTI, which was $19 million, and it becomes a slightly less impressive 81% growth, but probably not that much less impressive. So this is an incredibly interesting story at an incredibly interesting point in its development. And I think the CEO change is not to be underestimated in terms of what this means for the potential size of this business. He is not going to stop until this business becomes a truly global retailer, or he dies trying. The other key thing is that the dividend was 74 cents, so more than 100% payout ratio. much higher than the market expected, much higher than we expected as well. There's no dividend policy that Lovisa has, but they're very happy to send funds back to shareholders when they don't need them. So what do? We increased our sales estimates by 9% for next year. We increased our EBIT before LTI by 17%. That flows down to an EPS and DPS increase also of 17%. I said a little while ago that if you look at the trajectory of Zara's development over the years and overlaid Lovisa, it looks suspiciously similar. I would argue that it's looking suspiciously similar even more today. So I would strongly recommend that you look at Lovisa for a long-term play. This could be one that just continues to deliver for you over decades.